Hello everybody, my name is Nicola and welcome back to my channel. This is the Frugal Cottage where we talk all things money to help you on your financial journey. Now don't forget to like and subscribe and let's get started. So today's video is all about how to pay off your mortgage early, and there are certain things to look for when you're thinking about this and motivational things to help you along your journey, because for most people having a mortgage is something that they'll pay over 20, 25, even 30 years, and it comes out of your bank account every month and it kind of just gets along by itself, so to speak. But there are things you can do to ensure that you can pay that off early and in the end have it cost you less than it would do if you let it roll on for the amount of time that you've got your mortgage for. So first of all, how does a mortgage work? Well, a bank loans you the money, say £150,000, for you to buy a house. You normally have to put down 10% as a deposit, sometimes 5% depending on the circumstances, but 10% is usually around, and it's great if you can put more down, but we'll say 10%. But you've borrowed £150,000 off the bank. Now that is called the principal amount. So there are three different things that come into play when you think about talking about paying your mortgage off early, and the first thing is the principal. So how much you owe the bank. Now obviously a bank, being a bank and a business, they're going to want to make as much money off you as they can. So you have the principal, so the amount you borrowed. You then borrow it at an interest rate. So there are fixed rate mortgages, maybe 2 years or a 5-year fix. There are variable rate fixes, so it kind of tracks the base rate. Either of these things mean that you are paying a percentage of interest back to the bank for them to loan you that money. So say it's not like this, but say that you've got £150,000 your mortgage and your interest a month is 2%. Then every month they'll add on an interest kind of back into your account, so you'll pay your mortgage but then the interest gets added back on. When you are first starting out, time is an issue. So how it works is when you've got your mortgage, you bought your nice new house, you moved in and your first payment goes out towards your first mortgage. We'll keep the £150,000 number as that. Then you'll notice that you've paid your mortgage payment, 500, 550, whatever your payment is a month. You'll notice then on the same, it's normally the same day, that there then is some money added back onto the amount of your loan in interest. The way that the bank earns its money is at the start of your mortgage, kind of years 1, 2 and 3, you'll notice that the interest applied back onto your loan is really high. And over time, because you're slowly paying off your mortgage by mortgage payments, that interest goes down slightly over time. The best time to do any kind of mortgage overpayment, if you can, is when you first get it. In those first 3 years you will make the most difference, because when you first start out your mortgage and you're paying it for the first year, about 90% of your mortgage payment actually goes on paying off that interest. It does not go towards the principal amount, which is the amount you borrowed. It goes to the bank to pay back for you being able to borrow that money in the first place. And over time, it kind of pays less and less in interest, so that tiny bit more then goes to the principal and reduces it. So it might seem in the first year that you're not really making much progress in terms of paying down your mortgage. That's on purpose. A bank is a business, that is how they make their money back. They've loaned you all this money, they're expecting it to take 25, 30 years to pay off. They want to see a return on that for them, so that's how it works. In the first 3 years also, depends how big your mortgage is I suppose, you will pay, most of the time, the majority of it is the interest that's added back on. A teeny tiny bit is the principal. This is when making mortgage overpayments is absolutely vital if you can stretch to that. I will leave a link below. I've got another video about why you should be overpaying your mortgage with examples of just how much money even quite small amounts every month can add up to over the term of your mortgage. Because we're talking years and years, even the smallest amounts add up over time, and time is a real key issue here. If you want to pay your mortgage off early, the sooner you get started, the sooner you're kind of into the journey, the better it is for you, because not only do you get to pay a mortgage off early and therefore don't have the monthly payments anymore, but you also don't pay as much interest on your loan as expected, i.e. the bank loses some money on what they thought they would get from you, which is never a bad thing. So how do you pay off your mortgage early? That's the key question. You need to look at carefully, first of all. Some mortgage lenders will only let you pay off 10% of your loan for that year. So in the first year, using the £150,000 amount, 10% of that is £15,000. So you could overpay, in theory, in that first year of owning your mortgage by £15,000. That does not include your ordinary mortgage payment, that presumably goes out in the first month. That's anything extra that you can add on. Most of us don't have an extra 10%, but it's a good number to be able to aim for over time, because as you reduce your mortgage, obviously the 10% number also reduces. But if you can aim to overpay your mortgage by 10% in the long run, obviously that will help. Or, and this is the way we have done this to begin with, in the first year, if you can, take the same approach to overpaying your mortgage as you did to save your mortgage, your house deposit. If you saved and scrimped and scraped every single penny for your house deposit, in that first year, first 3 years if you want, but mainly the first year, try and do the same approach to your mortgage. Every single spare penny that you can, fling at that mortgage loan. Because in that first year it will make the most difference. It is really vital to get into the habit of sending any kind of mortgage overpayment, whether it's on the day you get paid, whether it's on the first of the month. Mortgage interest is calculated daily, so the sooner you can get it going, the sooner you can send that mortgage payment over is good. The other thing to do, and this is currently how we work out is we do mortgage overpayments every month, but we aim to overpay by the interest added, so that our actual mortgage payment is working on chipping away at that principal amount. If we overpay by the interest, then that's taken care of, and our mortgage payment is working on bringing down the overall balance. And for us that works. Sometimes it's more than our interest, sometimes it's slightly less, it depends on the month. But as a starting point, to try and think about how to pay your mortgage off early, have a look and see just how much interest is applied to your mortgage on the first of the month. And then, if you want to be really geeky, work out what that is per day and let that motivate you to make some overpayments. Some mortgages cost so much money per day that we don't even think about, because it's just like everybody has a mortgage payment, well, mortgage or rent, but we're talking about mortgages here. Everybody has a mortgage payment, it just goes out, that's how it is. But it doesn't have to be. Most people's budget, when written out, their mortgage payment is the highest thing, the most expensive thing they pay for each month. It is for us. Getting rid of that monthly payment would free up so many different ideas, because that money would be freed up every month. You can send it to different places then. So look at your mortgage provider and see if they've got the 10% rule, because if you pay over the 10% overpayment each year, and in your kind of terms and conditions of your mortgage it states that you are not allowed to, there are very big charges for going over, so make sure you don't do that. Then have a look at what interest is applied, and at least as a starting point, try and overpay your mortgage by that a month. That might seem a bit daunting, it depends how big your mortgage is and how much interest you get applied back on. It depends what kind of percentage your loan is at the moment. But try and do the interest first, and then as you see that number starting to reduce that bit faster, because it should do, if you're overpaying by the interest each month, your mortgage overpayment itself is working on bringing down the actual loan rather than the interest owed. It's a three-way thing: principal, interest and time. So the time aspect is crucial. If you apply these things and try, you could probably, give or take 5 to 10 years off your mortgage, and how good would that be? You're not paying money back to the bank and you're free of that payment. So have a look at your terms and conditions, see if you've got the 10% rule, so to speak, on your terms and conditions, and then that gives you something to aim for. We've never managed to overpay by 10% of our original loan each year, just because that's quite a substantial amount really, especially when you're first starting off. But the interest owed is a much more smaller number, a much more attainable number in the first instance. And then it depends how your bank works. You should be able to just transfer it straight over as a payment. So I have your mortgage as a payee on your bank account and do it via online banking, and it should just go wherever it goes and then be applied to your mortgage. We're lucky we have our current account and our mortgage with the same bank. So when we do ours on online banking, it's instant. So it goes out of the current account and is applied to our mortgage, and it shows up straight away in our online banking. If you've got mortgage and a current account with different banks, it might take a day or two depending on how quick their payment system is. But get in the habit of transferring that over. There is nothing to stop you from doing multiple overpayments a month, so long as you don't go over the 10%, even if you overpay something every day. So say you're going to set yourself a target and saying, right, I'm going to overpay our mortgage by £10 a day. Every night you log on to your online banking and transfer that over, get in the habit of it. Yes, it might look a bit strange on your mortgage statement, doesn't matter. Because your interest is calculated daily, the more often you can overpay on that, the better. And then, when you're thinking about overpaying, have a look at your budget and see just where you can squeeze some money out of there somewhere. Some months might be better than others. Some months you might find that you are under budget, so therefore maybe you want to send that extra to your mortgage overpayment. Some months it might be really tight and therefore you think maybe I can't do that this month. Any little thing you do to overpay your mortgage will help you to pay it off early. And wouldn't we all want that at the end of the day? So, points to think about. First of all, have a look and see what your interest rate is for your mortgage. Some people have a fixed rate, some people have one that follows the base rate. Have a look, it's in your terms and conditions of your mortgage. You know all that paperwork you get when you sign it, it's in there somewhere. Also in there is whether you can overpay by 10%. Some mortgages do allow unlimited overpayments, but they're fairly rare now. Most of the time it is 10%, so check that. Those two things are quite important just to know as numbers, if nothing else. You don't want to have the penalty for going over the 10% because it's thousands in charges. It's not like a little amount. And then make the start. So either aim for the 10% and work out what that is, or probably more achievable to begin with is aiming to pay off the interest added. And the sooner you get that ball rolling and it kind of snowballs, and then all of a sudden, oh, the interest is going down, keep it at the same level. So say you're paying off £220 a month in interest, and then it goes down to 210 and then 200. Keep your overpayment at 220 because you're used to it by then. You might even manage to stretch it to 250. It's those little changes that add up over time, and time is the most kind of crucial thing in this. Obviously we're expected to have mortgages for years and years and years, and people move house, people want bigger houses, people want X, Y and Z. You're supposed to have that kind of mortgage ball and chain for a long time. However, there are definite steps you can take to paying off that mortgage early. And you never know, once you get in the habit of it, then you think, oh, maybe I don't need a takeaway this week, let's send that to the mortgages instead. I don't need X, Y and Z, let's send that to our mortgage instead. And it becomes a bit of a game to see just how much you can overpay. It does become, especially if you've got it on online banking, watching that number go down, it does become a bit addictive. So just be wary, don't ever leave yourself short. Now the one thing to be wary of is, once you send an overpayment to your mortgage, you cannot get that money back. It's not like having it sat in a savings account. If you've sent it as an overpayment, providing you don't have an offset mortgage, which is slightly different, once you've sent that mortgage overpayment to the bank that has your mortgage in and it's applied to your loan, you cannot get that money back. So just make sure that you are able to do that and to kind of don't leave yourself short in the budget just because you want to do a really big overpayment. Sometimes it's best to wait until you're near the end of the month and you're nearing to payday and you can see just how much is left, and then maybe do an additional one. It's up to you how you work it. I'd suggest tracking your overpayments somehow, whether it's pen and paper, whether it's a spreadsheet, something that keeps you motivated. But they're the easy steps to do to help you pay that mortgage off early. And seriously, every single penny helps. I think I've transferred over like 79p as a mortgage overpayment one day. Which seems really daft, doesn't it? Like, that can't make any difference. But if I did that every single day, it would start to make a difference eventually. So every single penny helps. The more you can do to begin with in those first few years of your mortgage loan, the better. And just see how you get on. And if you manage to pay it off in 10 years rather than the 25, think about how much money in interest you saved. And also think about how much it would be, like how nice it would be to not have that mortgage payment on the first of the month. Would give you so many more options, would it not? Might even give you the idea of retiring early. But that's another video. I hope you like this. Don't forget to like and subscribe. Leave the comments below. Have you ever done any overpayments? Are you thinking about it? Is there anything stopping you from starting that? I love to read comments from people and get into conversations. I hope you're staying safe at home, and I will see you again very soon.